Hi, it's Wyatt at Rubicon Mortgage Advisors. I wanted to explain what earnest money is. That's something we're going to need to budget for, that it's more upfront in a transaction. Earnest money is typically $500, 1,000, 1% of the loan type. If you're talking new construction, sometimes that can be $3,000 to $5,000, sometimes even as much as 7,500 or more, where they do expect more money up front on building transactions, that is. But for regular types of transactions, it gives you an idea on what to budget for up front. I also want to explain what earnest money is. And what earnest money is a check. It's a check you're writing up front to show the sellers you're serious about buying their specific home. And what I mean by that is that every great realtor will protect your earnest money. And what I mean by that is that if there's something happens on the loan, something happens on the house, that you get your earnest money back. What happens is that as long as you have that protection written in the purchase agreement, you don't see the words non-refundable earnest money. Make sure to call me if you're thinking about signing something like that. But most type of earnest money is regular earnest money in a transaction. And what happens is the only time you typically will lose your earnest money, majority of the time that is when everything's going perfect on a loan transaction, and then 2 weeks prior to close, you just change your mind, decide, I don't want to buy this house anymore. Well, if you do that to a seller, that's when sellers are going to pocket your earnest money. Otherwise, what happens is it goes towards your down payment requirement that's associated with the loan. And it's paid for upfront is what happens. And it's a check that is being cut right at the time of the offer is what happens to show the sellers you're serious about buying the house. We'll talk again real soon. Thanks.